Hey, everybody, and welcome back to Christopher Garza Real Estate News, where you will get nothing but the best news for your local area. Today, we're going to talk about kind of the buyer side and what that means in today's market. Are there no homes out there? Are there too many homes and just not enough affordability? So let's kind of get into that. Before that, this is an article put out by Rose Quint of the National Association of Home Builders. It says, despite lower perceptions of affordability, the share of prospective home buyers who are actively engaged in the purchase process, move past the planning point, remained essentially unchanged between the first two quarters of 2023, which this is just a national stat. It gets into the West down here, which I have highlighted, which says 66% to 58%. And what this means is not everybody, not even a huge portion of them, have dropped off as far as home buyers out there. Now, with interest rates being super high at the moment and it's staying up there, people are kind of getting used to that. And you are seeing homes coming on the market, and you're also seeing a lot of competitive multiple offers on well priced homes out there. But before we get too far into that, if you wouldn't mind, just subscribe, share, and like for me. It really does help the algorithm and gets out a lot of really good information to maybe a couple people like your neighbors, bartender that you know, anybody that might be looking for a home in the area. And the area that I'm specifically talking about is going to be not condominiums. These stats that I'm going to be pulling and showing are going to be for residential homes only. And these are going to be new construction as well as the homes that have been lived in a little bit. So, 3 years old, 50 years old, 100 years old. Those are all going to be in these stats. And the area is going to be right here highlighted, which is West Seattle, South Seattle, the SeaTac area, Tukwila, and Des Moines. And the 7-day running numbers, which you will see here, have actually fallen off on the new listings. Now, if you go back and look at a couple of my old videos, which I'll try and find a way to throw a description up here, over there, or something like that, but they have actually fallen off from around an average of about 100 new listings per week. This week it's only about 67. I think it was 70 yesterday, but it really has gone down. And with the pending and sold not going down and staying steady, the actual amount of homes that are on the market are slowly getting chipped away again. With the interest rates being so high last year, we built up a little bit of a buffer. And when I say a little bit, I mean a tiny bit of buffer in between what we should have on the market, which is somewhere around 1,000 homes for this area, and what we actually have on the market, which is, I believe, somewhere in the 300 and I want to say 50 to 400 range normally at the moment, which is still super, super low. I mean, it's crazy. A bunch of competitive offers with this high of interest rates, seeing as where they were a year and a half, 2 years ago. And the stats today I'm also going to be showing are going to be only 3 years old. Where I normally do 10 years old, it's going to be just 3 years old, just so you can see that comparison to a little bit before COVID happened, which is terrible. But for real estate, it really did elevate the numbers up. And so this is the daily mortgage rates right here. This is our 30-year fix is going to go up a little over a half a point since last week when we did this. And then the 30-year also went up a little bit as well. So it was kind of going down. Inflation rates were kind of going down a little bit. They did a little bit of stuff in the market, and interest rates kind of crept back up a little bit more this past week. And that didn't really help inventory a lot. People seeing, oh, the rate's creeping back up. We're just going to hold off on listing our homes for a little while longer. And that's one reason why you do see that super low new listings for this past week. And as far as new listings for the past 3 years, you can kind of see here with the orange in the new listings. And I try to make it vibrant orange so everybody can see it. But in the June new listings, you have 398. So July, I think I did around about 370 to 390. I didn't do the total math, but just kind of doing basic math. It was around that area for the July. And you're kind of seeing a stabilization, not a super high uptick of this whenever you do enter in the July numbers, compared to if you do go back to, the June, July here, you're seeing a little uptick right before the downtick. Now, in our area right here, as far as where we are and where that might be, it's kind of going to level off a little bit. So you're not going to see the normal, jumping up and then shooting down for the winter time this year as much, because there's not a lot of homes that are being put on the market with such high interest rates. Now, you also might be looking at this graph saying, what the heck, Chris? There's a whole bunch of homes on the market. You see, there's way more homes on there than are actually being sold. Well, sadly, not all those homes are actually being sold. And some of those homes, if not contract expiring or canceling, the listing on the multiple listing service, they aren't being sold. So the reason for that is a numerous amount of things. But one great thing that can come out of that is if you are working with a real estate agent, you can kind of talk to them about, hey, homes that are back on the market or homes that have expired from that, you might be able to see a chance of maybe a lower price in there, because some sellers who lost their buyers have a whole lot of motivation to get back on the market and get back under contract. So talk to your real estate professional about that, because that is one opportunity that might be passed up without the proper, the proper eyeballs on it. So that's on that. Listings and actual what is being sold, super low inventory rate. So again, don't let these graphs fool you too much on it showing, oh, well, there's a lot of homes on there, because all these homes aren't actually selling. Now, these sold homes actually did sell. The ones here in the blue, which you can also see a great topic to talk about is in the wintertime, you normally see, like back here in 2020, you see the actual sold homes are taking over the new listings. So more, I talked about it last week, more new construction going to be sold at that time because of the people coming around for the holidays. However, this one coming up, you're not going to be seeing a lot of that overlapping of the sold homes because of people wanting to get into homes, because of such super low interest rates and just a pent up buyer demand. It's not going to be as noticeable, I can predict on that, as what you see here as far as the sold homes jumping way over the new listing homes for this winter season. Now quarter four, I'm sorry. Now quarter three, from what it was talking about, they're seeing that it's going to go up a little bit, but it's not going to be a huge appreciation as far as new homes and sold homes, just because of the interest rates as well. So interest rates are affecting a lot of what's going on in the market. Now, as far as the days on market versus percentage of original list price received, this is another super interesting graph right here. You'll see right around when the interest rates got raised last year at March, a couple months after that, they, were ticking up, and we started building up a little bit more inventory, and you saw the percentage of list price was starting to go down, and the actual inventory was going up a little bit longer, as well as the days on market, which you can see on here in the orange. This is all from those interest rates rising. Now the new norm started hitting in, and people were wanting to get into houses. They're not wanting to pay rent, or they're just not happy with whatever living situation they're in. So they're back on the market. They're out there buying, and you can really see, even with the interest rates here, there's a huge, this is super low interest rates that were in this area, super low that were in this area. You can see that it's kind of getting back to that gap in between, which is the gap meaning lower days on market and higher percentage of what you're going to receive from the original list price. Now, not there yet. Now, another great takeaway from this is on the graphs here, you can see that when you're pricing real estate, you need to properly price it. And you're going to be getting that higher list percentage because buyers are going to be fighting over your home because there's not very many homes that are on that market. Now, the way that real estate prices work is this downtrend right here does not mean that prices are going down. It's not, oh, well, my home's lower. That just means that they're not receiving as much as what it was. And the pricing of real estate is actually going to be climbing throughout that process. So if you were seeing all this doom and gloom, oh man, real estate prices are going down. Look at this. They're not receiving this much. Well, I mean, the price of real estate already got raised up because, you're not going to, for instance, you're not going to pay or you're not going to accept an offer if you were to sell your home because if John up the road sold it for $1 million, you're not going to accept an offer for $800,000 if you have pretty much the exact same home. Why is that? Because somebody paid $1 million for John's house up the road. So the next person might come in, oh, I love this home. I missed out on that last home that John had, so I'm willing to pay $1,020,000. And so it keeps elevating the actual price of the home. And the only thing, like right now with interest rates, that would take away from that is the affordability that people are actually able to get into. And so that's kind of where the average sales price is being blown up on the internet and all the crazy doom and gloomers websites. In reality, it's not that way. It's just the purchasing price is not as high as what it was whenever interest rates were super low. So all of that being said, buyers that are out there right now, not as much competition because of the investors not really crazily being out there swooping up all those properties, and people that are sitting with those 2-3% interest rates that aren't willing to get on the market also aren't going to go out and buy a home. So you're not going to be competing against either move downers, or kind of just people that want to move away to a different place. Not happening whenever you have such a super low interest rate and they just really don't want to trade it in for that higher one. So that's kind of where that all wraps up on that. Now, if you wouldn't mind, smash that subscribe button finally over there. And I will see you next week. Enjoy your week. Boom.